A very good morning, everyone, and welcome to today's market snapshot. You're here today with Norbert Kiza. My colleague Rufas Kamau is not going to be with us today. And of course, you're going to be with me today for today's market snapshot. I hope we're all having a splendid morning. Please comment in the comment section how you're feeling about the markets today, and how your week is so far. Yeah, so we're just getting back from the US bank holiday yesterday. Yesterday was the Independence Day in the US, and of course, volumes were very slim yesterday. There wasn't that much activity. Today, of course, we're getting a lot of movement on the different assets, the risky assets, the stock indices. We are seeing quite a bit of movement. Yes, morning, Matilda. Hi, Vandi. Hi, Philip. I hope you guys are doing well. Yeah, so right before you, we have the economic calendar for today. And of course, we're now just 1 hour into the Europe session. And we're having a lot of exciting movements, as we'll see as we proceed. Of course, looking quickly at the economic calendar, we have quite a number of things that are there. As you can see, let's just scroll in and just have a quick look at that. So in the Australia, of course, we had the AIG manufacturing index. We've had the PMIs coming out in Japan. Of course, just from looking at the PMIs, I'm seeing that manufacturing seems to be strong. As we know that, of course, when the PMIs are above the level of 50, it shows that there's stable manufacturing happening in those particular countries. And of course, as you know, how data for PMI is retrieved is that it's gotten from the different sectors, and of course, every single entity that is participating in the manufacturing sector provides that data. So we are seeing also just a bit of a drop on the Kaiksan services PMI in China. Of course, still strong above 50, but of course, it's had a bit of a decline there. We're also monitoring a few developments regarding chip manufacturing in China. It seems like there's a developing story with regards to a pausing of chip manufacturing over in China. Of course, I know most of the chips, especially for the tech companies, are manufactured over in Taiwan. And of course, you guys are aware of the ongoing trade war between US and China. So we hope to see how that, of course, plays out. Generally, of course, PMI is all coming out strong, aside from maybe from the S&P Global Composite PMI, which decelerated slightly below 50. But still strong. So the big event for today is going to be in the US session. Hi, Jess Squad, you're saying, Nobby, why is oil price tanking despite Saudi and Russia announcement of oil cut? If you may please elaborate. Yeah, so we're going to take a look at oil. Of course, as we know, what we know with oil price cuts usually is that when we have an oil price cut, that of course should allow the oil price usually to rise. We'll look at it in a moment. I'll get back to you on that one, Jess Squad. So, of course, the big event is going to be in the US session. We have the FOMC meeting minutes. We also have one of the governors of the Fed of the Fed also going to speak. That's FOMC member Williams. So for the Fed FOMC meeting minutes, essentially what we're going to be looking out for is majorly is on the rate hikes. So of course, as we know, recently on the forum where we had the ECB governor, the Bank of Japan governor, the Bank of England governor, as well as Paul, the governor, the chair of the Fed, they all were in consensus that they're going to keep with the rate hikes as they try to fight the sticky inflation. And of course, we're going to be looking out for whether there's a possibility that we end the year with rate hikes. So currently, the target range for the Fed is between 5.2% to about 5.6%. It was just revised from 5.5% to 5.6%. And of course, what that implies for trading is that if we see any hint in the meeting minutes that are going to be released, that there's a potential for rate hikes later this year, then of course we might see very strong dollar strength, especially within this quarter between July and September. Yeah, so of course we also have the API weekly crude oil stocks. This of course usually when the weekly crude oil stocks usually rise, it's just an indication that we'll have we still have a little bit more oil available in the market. Yeah, so without wasting time, I would like to cross over to the charts so that we can see what's happening in the markets currently on the different assets. Okay, so again, guys, there's a bit of a lag. Don't mind that. You're going to see the chart in a moment. Okay, so this is gold. So gold, as you know it, guys, we had gold rising last week because of the PCE data that came out on Friday. So the PCE data is the Fed's inflation gauge. The reason why we had the rise in gold especially in the US session, that was Friday, and of course as we opened the week into Monday, we still had gold rising, breaking and sustaining that break above the descending trend line on a daily. That was majorly because of declining core PCE data that we had in the US. So I feel, of course, I had reservations regarding dollar strength because DXY strength hasn't been that strong. Even last week, we still had the DXY really showing a bit of weakness. And of course, when the PCE data was released last week, it came in against the dollar because it indicated that inflation was starting to decelerate in the US. Yeah. So yeah. So here we're seeing what is the relevance of the FOMC minutes. The dot plot was released, which showed majority of members indicated higher terminal rates. In addition, chair was clear that the pause was temporary. Yeah. So of course, yeah. So just to respond to that, Apollo. Yes. So of course, it's clear what the dot plot has, and of course, we know the purpose of the minutes is that we shall get an indication of what was really discussed in the 2 days that the Fed met in June. That's the purpose of the minutes. And of course, much of what we have in the media or in the mainstream is really just opinions, of course. Whenever we have the minutes being released, those are documented minutes, and we can use them to then make our decisions, knowing that that was what was really discussed by the chair. Yeah. So of course, the minutes, as we'll hear from them, there might be a bit of movement or not. And of course, again, like I will hint on that is Apollo, is that it will really depend on what essentially is discussed, what has been documented to have been discussed. And of course, what we're looking out for is not just really anything in the minutes, but we are really looking out for essentially whether the rate hikes are actually going to, whether they have actually been discussed a lot by the members. And in addition to that is what the members feel about the disinflation we have been having in the US, because I mean, of course, I know that the 2% inflation target is a long-term target, but we want to find out whether how the Fed feels about inflation, and that, of course, then in turn feeds into their hopes for the future. Yeah. So regarding gold, yes. So Vandy, the reason why I have the volumes there is, of course, I use the volumes not that much because I have different charts, but the volumes usually I look out for divergence on the volumes for me to see what's happening. Yeah. So for instance, like here, you see that volume is diverging. So it usually tells me that if it's diverging, then of course there's going to be a bit of a movement. Yeah, so I still feel we still have a lot of levels to break on gold. First of all, of course, we have this level, which of course has been a resistance point, and of course we've been having liquidity failing to break, upside liquidity failing to break through these levels. So we have this point right here. We also have this point right here. We have quite a number of points. Of course, I don't expect gold to reach these highs. That's if maybe something will come out from the minutes, which of course I don't expect. There might not be that much movement from the minutes that we'll have. So I'm still, of course, having a bit of a bearish bias on gold. I expect that we might still, have price action heading back below that trend line. And of course, again, if these key levels here fail to break, then of course we might continue a bit of deceleration on gold. If DXY relative strength increases, which of course I don't expect it to, knowing that the most recent data we had for the PCE indicated that inflation is reducing in the US, and of course that of course has been having a lot of it's brought a lot of weakness for DXY. So I expect that will give gold a bit of medium term strength, and of course long term we might see a break back into that descending trend line. If you go back on the big picture, of course, guys, we know that gold has still not retested the February lows, which we had over here. Okay, so okay, sorry, that's somewhere around here. Yeah, so I still feel that of course if we fail to have movement above or sustained above that descending trend line, then we most probably are going to have a retest of the February levels somewhere around here. So of course we have quite a number of events this week. This week is a very saturated week. So we have the NFP coming out Friday. So that of course is going to affect gold going into the rest of the week. But for today and tomorrow, we are going to have of course the catalyst of the FOMC minutes contributing to movement there. Yeah. So when we cross over into Euro USD, the last time we met on Eid, we said that Euro USD had failed to break above this descending trend line here, and of course that's majorly because of what we're seeing with the DXY. DXY had a bit of sustained strength, and that's the reason also why we had gold also breaking the way we had it breaking last week before FPCE saved it. Yeah. So of course, again, much as we are still having a lot of demand in indication with the candles that we are seeing, price has still failed to break through these levels. I think you're seeing there. There's a lot of rejection we're having on this descending trend line, which has been respected. And of course, much as we have a break above this level here, the movement still has not been sustained. Yeah. So we have to wait and see how price action plays out, but on the big picture, we still have this level to break right here, which is which was last seen on 22nd of June. And of course, if we sustain price action above this level here, then we are going to most probably retest these points here that are price action left. So Euro USD, of course, a catalyst for it will be the FOMC meeting minutes. Again, as you know, the terminal rates for the euro as well as for the USD, the euro still has a lower terminal rate, so the dollar is still stronger. But if we have ECB having more hawkishness than the Fed, then most likely we might have a Euro USD, going all the way and break into these points. And of course, that is also going to depend on the DXY relative strength. If DXY continues to have subdued strength, then of course it will give a Euro USD a bit of time to have that upside movement. Yeah. Crossing over to oil, we had there's someone who asked about oil. Yeah, just squad. Let me just handle your oil quickly. Yeah. So oil, of course, I know intraday. I don't know which time frame you're trading on, but intraday really oil has really been a bit of a tricky one. It still, of course, is respecting that descending trend line over here. Just a moment. Let's see. Yeah, so on the big picture, oil is still respecting that descending trend line that we last saw in June 2022. I still feel that much as we're having the oil cuts, we still need to see how that plays out in the price of oil. Then, of course, the other thing is that we also have to monitor what the crude oil inventories will be. If we see the crude oil inventories coming out Thursday, well, if there's a reduction on the crude oil inventories, then most probably we're going to see now the impact of the cuts then panning out in the market. And we of course, I still feel, of course, oil still has a bit of movement, but in the big picture, we are most likely going to have a move breaking above this descending trend line, and of course continuing above it. Of course, on the back of the oil cuts for UAE and Russia. Yeah. So Russia, UAE oil cuts to feed into price with time. Okay. Yeah. So that's what I can say a bit on oil. And again, the descending trend line is majorly what we are waiting for oil. Then if you see this descending wedge, as you see, guys, price respected, rather didn't respect this descending trend line. It broke through it and it has sustained above it. So which is a good indication of some bullish momentum there for oil. Yeah. Humble request, could you possibly prepare how to trade using volume? I feel I want to get your thought process on that strategy. Yeah, so volume may not be used all the time, just squad. Sometimes, of course, volume usually you use it when it's diverging. So on any indications when volume is diverging and it's not in line with the momentum and with price action, that usually then indicates that you need to trade the other side of the volume. So I use volume only when it's diverging. But the other thing that's also a bit interesting is that we are having quite a number of green volume bars, which is an indication of bulls. And this may also show you that there's a lot of accumulation that's happening on oil. And it could mean that we might really see, we're yet to see more of oil coming in later. Yes, Apollo, what's your long-term view on stocks and indices, European indices versus USA indices? Not on oil, we have a whole day meeting with OPEC. This may cause some volatility. Yeah. So of course, that's true, Apollo. Of course, we're having, of course, with the oil cuts, the big picture is really that the big oil producers and exporters want to have reduce in the available oil in the world market. So of course, that will have a bit of upside potential for oil. So wait to see what comes out from that. Regarding the European indices, of course, as we know, what I can say, of course, when I speak about the Dow here, it's been having a bit of sustained strength. That's because of course, strong GDP. And of course, we know that technical recession, the US had contracting quotas of GDP that was last year. So this year, so far, we have not had any contracting quotas on GDP. Inflation is decelerating and not at a quick pace, which means that's okay. Then, of course, employment, as you know, that the US unemployment rate is at a 50-year low, which is really something strong for the stock indices. The other thing, of course, as we know, is especially when I speak about the NASDAQ, things are looking good for tech stocks, especially with AI. And of course, you know that the stock indices usually are forward looking. Yeah. Regarding the DAX, let me see where DAX is. Okay. So we have DAX here. So DAX, of course, what has been helping it, I know that that there was the talk of the technical recession in Germany. But of course, you know that the stocks, especially those that are recession proof, usually will protect downside in indices. Yeah, so that might be one reason why there's a bit of a disconnect from what's happening with the technical recession as well as what we're seeing on the indices. Yeah. So when we cross over to GBP USD, so GBP USD, of course, for it on the big picture, still really major uptrend for this one, and of course it's also gaining from relative dollar weakness from the PCE data. This move that we had here, of course, was was last week, and of course the reason why we had that quick movement, same thing that we also saw for Euro USD. was majorly because of the slowdown on PCE data. So I still feel we are yet to see a big move on GBP USD. On a big picture, of course, even the average price target for Q4 for the big banks, they're looking for higher prices on this particular pair. Somewhere, back to 1.30, back to 1.35, around the area that it was before we had the Russia-Ukraine crisis that we had last year. So, of course, it's still a bit of developing, so we were yet to see what happens with it. And of course, just to speak more about it is that we are yet to see NFP. If we get NFP coming out on Friday, that's a bit subdued or slightly lower, then we will see strong upside for most of these risky assets. Yeah, so that's pretty much it. Today, of course, we have FOMC meeting minutes. That's the only event we have today. We're yet to see what happens later. Yes, Charlie Genius, you're most welcome. Yeah, we're yet to see what happens later with all these different risky assets. So that's about it for today, guys. Of course, we also have earnings season. Don't forget that July is earnings seasons, guys. So those of you that are trading indices, those of you that are trading stocks, be aware that this month of July, the companies are releasing earnings for Q2. So we are going to have a bit of gapping. We are going to have a bit of volatility on most of these different stocks. Yeah, so I think that's pretty much it for today. Not too much for us to discuss basing on what we're having with the chat. Maybe just quickly to go to I could share. Yes, so Apollo asking, what's your view on US Treasuries? Yes, so US Treasuries, of course, we have been having them rising. That, of course, is because of the rising risks that we're having with recession. So, of course, now there's a bit of I've also seen that the US 10-year is almost reaching the October 22 levels that it had, which put a really big nail in the indices. So we are yet to see at what point do people move over to the bonds. The other thing, of course, is that don't forget that stocks that are within the cyclicals and FMCG sectors are supporting indices. So as long as we know that the utility stocks, the cyclical stocks are doing well, then of course will reduce the impact that we are seeing on the indices. And of course, as we know, since the US default was managed, that of course has helped the US bond yield, the bond market to settle in the US. Yeah. Okay, so that's essentially what we're having. We have different news that has been coming out. So if you just check through, you're seeing all these different news, and of course some of the targets that we're having for Euro USD, as you're seeing there. Most of the bands, of course, are looking out for different points there for upward movement. So we wait to see what happens later, guys. We'll see essentially what happens as things play out. Yeah, how does this affect the other risky assets? Of course, if the bond yields rise too quickly, that of course then usually indicates that we're going to have a bit of muted upside for the indices. But also when the US yields are up, then of course even DXY normally tends to also wake up and move. So of course we'll wait to see what happens. Yeah. So again, like I said, Apollo, the utility stocks and the cyclical stocks and the FMCG stocks, when they're doing well, then of course that means that investors can still stay divided between having bonds as well as also having stocks. Yeah. So that's it for today, guys. I wish you all happy trading, and I hope you guys have an awesome day and week. I'll catch you guys next Wednesday, and I sign out at this time. Thank you, guys. Have a nice day.